Good morning. In today's video, I want to go over HimsStock, and I think it's very important for us to understand exactly what Hims is, the competitors of Hims. Let's compare the competitors of Hims to Hims in this specific video, and then I wanted to give you some of my own personal thoughts about what I am doing with Hims. But before I go any further, I wanted to remind you that Hims is currently up 150% for the year, and Hims is still up 40% year to date. Now, Hims did have a recent retracement, but that's okay, and I'm going to explain to you why that's okay in this video. So if that's something that you like, please sit back, relax, enjoy the rest of this video. Before I go any further, I want to give a huge shout out to Raphael. Thank you so much for supporting me. You shared my video on StockTwits. To be honest, I don't really know what that is. I don't know if that's a website or something, but I appreciate it. And a lot of people from this website or app or community, I don't know, are shouting out my Hims videos. So thank you so much, and I appreciate it because, yes, I'm with Hims as Hims is going up, and I'm with Hims as Hims is going down. And although I absolutely adore Palantir, and Palantir is an absolute tear, I am still finding time to make videos about Hims because at the end of the day, it's not just about clicks and likes. It's about talking about the stuff that you actually like to talk about and that you actually invest into, unlike a lot of YouTubers that just talk about whatever is popular at that particular point in time. If you don't know what Hims is a telehealth play. However, it's a telehealth play unlike any other. The telehealth is the means to an end. What is the end? The end is selling your product. What is the product? Non-narcotic like medicine, feel-good medicine, putting the sexy back into taboo subjects. For example, hair care for men, skin care for men, erectile dysfunction for men, so on and so forth, and similar products for women. Hims sells these products and they do telehealth consultations. Their telehealth consultations literally take a minute or two. You do it through the internet. I went over it in some of my other videos. Bada bing, bada boom, and you get a prescription for what you need, for example, Viagra. But instead of just selling straight Viagra, they sell Viagra, but they also sell Viagra mints, and they call them hard mints. That's what I'm trying to say, that Hims takes the sexy from the taboo. They make the stuff that's like, hey, I don't really want to talk about this, to something that's, hey, let's talk about this. This is fucking cool. I absolutely adore Hims. Now, Hims topped out at around $12.50 right before earnings. After earnings, Hims has retreated, and now it's trading right just north of $9 a share. Personally, I am waiting for low $8 to buy more Hims. Now, I already have a Hims position. I have a very healthy Hims position. I have several tens of thousands of dollars invested into Hims. Hims is a large position for myself, and Hims remains and increases as a large position for myself. The downturn for Hims share price is not warranted, and I'll explain to you why. The last earnings, Hims beat on the top end, Hims beat on the low end, Hims increased guidance for next quarter, Hims increased guidance for the entire year, and Hims beat all of this, get this, with increasing their guidance from last quarter. So not only did they meet and destroy expectations, but they actually raised those expectations 3 months ago. And they've been doing that literally 4 out of the last 5 earnings. Now, last earnings, they should have went parabolic. They should have been up 10%, but they ended up being down 10%. And the price keeps going down. As the NASDAQ goes up, I've noticed that Hims does the opposite. Hims was like the #1 winner during this whole bear market. It was like literally over 200% up in a year, and it was absolutely beautiful. But now that Hims retreated, a lot of people are asking, Adam, is now a good time to buy? Is Hims done? And I'm going to say, in my personal opinion, I'm not qualified as a financial advisor, so don't listen to me. Do your own research. In my personal opinion, Hims is far from done because the footing foundations fundamentals is absolutely absurd. You don't believe me? Let's go over what analysts are saying. First, after earnings, they got no less than 3 upgrades from analysts that I personally saw. Piper Sandler just upgraded them from $10 to $12 a share. Out of the 10 analysts that are covering them, 5 analysts have them as a buy, 5 analysts have them as a hold, and if you know 5 plus 5 equals 10, and there's 10 analysts that are officially covering them, Zero analysts have them as a sell. Now, analysts are not the end-all, be-all of finance, but it's a really good sign when every single analyst has it either as a hold or a buy, which means they see either upside or extreme upside, because if they saw downside, they would have a sell signal. HIMSS increased their revenue by 88% last earnings. The earnings before that and the year before that, they increased their revenue by like 94, 97%. It is absolutely absurd that HIMSS price is down because they keep exceeding and knocking shit out of the park. Okay, you're going to say, well, Adam, let's compare it to its competitors. Maybe the competitors are doing just as good. Now, HIMSS, in my personal opinion, does not have any competitors because, again, they're not pushing telehealth. They're using telehealth to push their products. Well, let's compare them to the most obvious competitor, Teladoc, shall we? I made a list. This is the list right here. On the list, on the left-hand side, I have HIMSS. On the right-hand side, I have Teladoc. I have a price-to-sales ratio. I have a year-over-year growth. I have a gross margin. I have a net margin. I have a current cash and cash equivalent. And then I have a current debt or liability. Let's start. The price for sales of HIMSS is 3.1. However, the price of Teladoc, price per sales, is 1.58. So HIMSS price to sale is twice as expensive as Teladoc. So you're going to say, well, Adam, isn't that bad? Doesn't that make HIMSS overvalued? Well, we got to actually see about the revenue, the growth. Well, if you're paying twice as much for a company's price for sales, that company's revenue should be at the very least twice the other companies. So while HIMSS is 3.1 price to sale and Teladoc is 1.58 price to sales, approximately twice as expensive, year-over-year growth for HIMSS is 88%, while year-over-year growth for Teladoc is 11%. So HIMSS is growing 8 times as fast as Teladoc in terms of revenue growth. Well, if HIMSS is growing 8 times as fast, is it warranted that their price for sales is twice as expensive as Teladoc? And the answer is yes, which means that it can still go up double price per sales from here and still be a better value than Teladoc. Now, there's a lot of other things that come into play, but just purely from price to sales and revenue generated, HIMSS is a much, much better play than Teladoc currently, and even if they are twice as expensive, which is freaking ridiculous to hear. So then you might say, well, Adam, let's get some other metrics over here. Okay, gross margin, 80% of HIMSS, and gross margins of Teladoc is 67.8%. So you're going to say, well, Adam, 80% is really, really good. They were guiding for 75%. They ended up getting 80%. The extra 5% that they're getting on top, they're going to redistribute that to customers' satisfaction. They started about a year and a half ago at 27%. 27% then became 50, high 50s, low 70s, mid 70s, high 70s, 80%. It's absolutely beautiful. Well, then you're going to say, well, Adam, that's gross. What about net? Okay. So net is how much money they're making per dollar. So per dollar, HIMSS is negative 9.65, which means they're losing 9.65 for every dollar, 9.65 cents. Teladoc is negative 285, which means for every single dollar, they're spending $2.85, right? The metric is completely different. Now, current cash and cash equivalents, short-term assets, $184 million for HIMSS, $888 million for Teladoc. Of the $888 million from what I saw, Teladoc does not invest it into any short-term assets, right? Like treasury bills, bonds, something like that. HIMSS does. So HIMSS is actually making money on their money. If I wasn't mistaken, I think like $40 million is invested into short-term investments. Well, then you have current liabilities. HIMSS current liabilities is $56 million, while Teladoc is $381 million. So if you take cash and cash equivalent to current liabilities, HIMSS is at a 3.2, while Teladoc is at a 2.3. So over here, the bigger the number, the better, because that means you have more assets to cover your liabilities. This is a very, very big deal. Now you might say, well, Adam, how does HIMS actually grow? Where does the growth actually come from? HIMS has 1.2 million subscribers. Last year, they had 646 million subscribers. But the most interesting thing is, not only did they have 1.2 million, or practically double the subscribers, the amount that they make per month per subscriber is now $55, while a year ago was $52. What does that tell you? Everybody that uses HIMS ends up spending more money on HIMS. Why? Remember I said that 80% margin, 5% is getting reinvested into customer satisfaction? That means that they're coming up with products that customers want because they have a lot of surveys, they have a lot of questions, and they listen to their customers. Who's the customer? Myself. I use their hair products all the time. I'm a subscriber. I spend a shit ton of money not to lose my hair. And there are a lot of men and women in the United States just like me, just like you. The reason I said United States is because they're only in 2 markets, and you guys got to understand that. So people are like, well, Adam, what's the growth? The growth is we're right now in the United States and the UK. We have tons and tons of ability to grow throughout the world. So one might say, well, Adam, they have a stronghold in the United States. Why would anybody, out of the United States and UK buy their products? There's local products that are in the stores. And to this, I'm going to say overwhelmingly, almost 100% of their business is actually done online. So they don't need to rely on local stores. All they need to do is do marketing. Now, a lot of people that I know see HIMS ads everywhere. And HIMS, for every dollar that they put into marketing, except for like paid spokesmen, they make that dollar back within 12 months. That is a fantastic return on your investment. That is a fantastic return of your money. The bottom line is this, and I could go into more detail. I can go into more depth. I could delve deeper on this. I could go to my desk and show you a bunch of different numbers and scenarios and charts. But I think you guys get the gist of it. You have a company that is growing at nearly 90% a year. You have a company that grew nearly 100% last year. You have a company that is projecting that it will grow nearly 60% for the next 2 years. You have a company that has 80% gross margins, and you have a company that is able to attract more subscribers, and the subscribers that they attract not only subscribe for 1 month, but they are reoccurring subscribers, reoccurring subscriptions. On top of that, they're able to extract more money from every single subscriber, from $52 to $55, and 52 was higher than 50. You understand what I mean? They're increasing their capabilities, and they have a lot of ways to grow. My personal play, for me, I'm waiting until it might go down to $8 or closer to the $8 mark. However, my scenario is different than your scenario because I already have a lot of shares. I am already up a lot on HIMS. And I learned one thing: don't chase and pick your positions. There is always a great investment out there. It's not just one stock. And I mean that about HIMS. I mean that about Palantir. I mean that about SPY. I mean that about Google, Microsoft. Any investment, there's always other investments. Don't be closed-minded. I'm going to be very patient and wait for HIMS to pull back. If it doesn't, fantastic. I already have shares. I already have options. If it does not go up and it is around $8 or so, a little less, a little more, next earnings, unless I hear something different, unless there's some clues that shows me that this is not going to be happening, I will be buying call options before the earnings because I think that HIMS is going to smash earnings as they did 4 out of the last 5 times. Now, it's possible they won't, but I believe that they will, and I believe that the gains that they should have had last earnings are going to come, as well as the gains that they should have this earnings. Now, it's possible that HIMS is going to run up to a new 52-week high for the next earnings. As the market goes up, HIMS can possibly go up as well. However, I have learned, in general, as a rule of thumb, HIMS does not move with the rest of the market. As tech is going up, HIMS calms down. There's going to be a lot of opportunity for HIMS to make money in the future. I think HIMS is going to get on this AI trend because they are very, very smart at marketing and public relations in the future. HIMS is going to reintroduce or introduce a lot of new products. If you look at the HIMS advisory board, which is, I believe, 15 people, top experts in their field, and the actual board of HIMS, they're all people of substance. They're all people that have a background. They're all people that come with years and decades of experience. And they're opening up doors to HIMS, and they're opening up doors to the people, their connections that they know to HIMS, right? And they're going to bring more products to the market. And the more products they bring to the market, I foresee that $50, which was $52, which was $50, is going to go up to $60 in the future, and so on and so forth. HIMS is not stopping growth. They had their second best quarter of growth, over 100 million subscribers in the last quarter. By all metrics, there is zero reason, technically, zero reason why HIMS should have retracted instead of expanded its share price. It is what it is. If you enjoyed this video, please give me the like, share, and subscribe. And please, I have a Twitter down below. It's going to be in the comments. Please join my Twitter. It's specifically for stocks. I would love to talk more about HIMS and actually have a following for HIMS, as well as my other stocks. Thank you and have a great day.